Hello everyone, my name is Pratik Prasoon. In this video, we are going to learn something about budgeting, what is a budget, how it is passed and all of that. Now before I start, I just want to say something. First thing is we do have courses for general awareness and we do have courses for test preparation or MBA preparation. The test course will have quant, will have logical reasoning, will have data interpretation, English comprehension, general awareness, computers, and speaking practice. All of that will be there till the first round. The cost of that is 8200, which is inclusive of the GST. You don't have to pay extra GST on it. Now, we do have another course also for GK. It's comprising of current affairs, which has three parts: the news, the issues, and the views, then history, culture, geography, environment, polity, schemes, then other awareness topics. And yes, speaking practice is here also. So every week we gather and we practice speaking. So it has a cost of 4,200, and here also the GST will be inclusive. You don't have to pay extra GST. If you want to enroll to either of the courses, then you can WhatsApp me with your name, email ID and the state at 7764869624. This year, we conducted interviews or mock OPIs for 100 people. And among those 100 people, when the first list of tests has been released, there have been 56 selections. 10 of them are in HR and LR, 6 of them are in ODCL, and almost 8 9 of them are in MHA, and 12 of them or more than that are in MPH courses. So if you wish to enroll, you can let me know at this very address, that is WhatsApp me at 7764869624. Now let us come to the main discussion which we are going to have, and that is all about the budget. What is a budget and what is government account and all of that. We do have our constitution. In constitution, that is Article 112, which talks about annual financial statement. So the first thing is the name budget itself is not there in the constitution. What is the meaning of budget, by the way? Budget has come from a word of French. Okay, and the meaning of that is briefcase. The word which is there for budget or similar to budget in our constitution is annual financial statement. And what is the article? The article is 112. Now the other word you should be knowing is, or you should be focusing, is estimate. So it is an estimate of receipt and expenditure of the government of India in the next financial year. So what is a budget? It is a estimate. It is a prediction that we are going to spend this much amount in the next year. That is what is budget. So first we'll try to understand from where, what are the sources for our government to acquire funds. So there are three government accounts. What are they? The first one is Consolidated Fund of India. Second one is Contingency Fund of India. The third one is Public Account of India. So what is a consolidated fund? So it is a repository where all the direct taxes like income tax, corporation tax, indirect taxes like GST, etc., they are kept, and non-tax revenue also, like some PSU might be there which will have profit. All of that, whatever other means of profit is there, all the money which is collected by the government, that will go into this purse. Now this purse is guarded by the parliament. If the government wants to take out some money from it, it will have to seek permission of the Lok Sabha. Okay, only when the Lok Sabha will give you permission, government can take out some money from it. And for that purpose only the budget is passed. Now come to Contingency Fund of India. So there is a corpus of around 30,000 rupees kept in the purse called Contingency Fund of India. Now who is guarding this fund? It is guarded by the president, or it is kept on behalf of the president. The president can take some amount from it in case of some contingency like earthquake, like flood or something. But suppose the president is going to take out 1 crore rupee out of this, then it will have to be approved by the parliament again in the future. And the day the parliament will approve the fund of 1 crore, on that very day, 1 crore will be taken out from Consolidated Fund of India and kept back to Contingency Fund of India, so that the corpus will remain 30,000 as it is. Now come to public account. Public account are funds kept by the government These are what? Liabilities of the government, which is not the money of the government. They cannot use, they can be used to show that yes, we have some money out there, we can take some loan. Now we'll see what is Consolidated Fund of India. It is a repository of all revenue received by the Government of India. It includes revenue earned from direct taxes like income tax, corporate tax, and indirect tax such as GST, customs, excise duties, and then dividend and profit from public sector undertaking. This investment receipt, debt repayment, and loan recoveries also go to this fund. All expenditure of the government is incurred from Consolidated Fund of India, and no amount can be drawn from it without authorization of the parliament. And that is why there is a need of a finance bill. There is a thing that some money comes out from the Consolidated Fund of India without being voted in the parliament. So what are these money? They are quite important. This question will come in UPSC and other examination time and again. So listen to it. The Constitution of India mandates that items of expenditure such as the emolument or salary of the president, the chairperson and deputy chairperson of Rajya Sabha, the Sabha speaker and the deputy speaker, their salary allowance, and the judges of the Supreme Court, their salary allowance, the CAG's salary allowance, and the Central Vigilance Commission salary and allowance will be charged on the Consolidated Fund of India and is not required to be voted by the Lok Sabha. That is the president first, then chairperson, deputy chairperson of Rajya Sabha, speaker, deputy speaker of the Lok Sabha. Then you have judges of the Supreme Court, including CAI, then CAG and CBC. These are the people. Now come to interest on payment, repayment of loans raised by the government and payments made to satisfy decree of the court. Compensation is going to come from here, may be charged on the Consolidated Fund of India and are not required to be voted by the Lok Sabha. Now here is a edge, I would say, and that is the salary of the High Court judge comes from Consolidated Fund of the state, but the pension of High Court judge comes from Consolidated Fund of India. So having understood everything about Consolidated Fund of India, let us move to the Contingency Fund of India. The Contingency Fund of India is in Article 267 of the Constitution. It is the fund placed at the disposal of the President of India to facilitate meeting of urgent unforeseen expenditure by the government pending authorization from the Parliament. So it will seek the permission of the parliament, but later. Now the president can take out some fund, and later, when authorization by the parliament will happen, then the equal amount will be taken from the consolidated fund and will be put back into the contingency fund. So parliamentary approval for such unforeseen expenditure is obtained ex post facto, and an equivalent amount is drawn from the Consolidated Fund of India to recoup the contingency fund after such post facto approval. The corpus of contingency fund as authorized by parliament presently stands 30,000 crore. Now we'll understand public account. So money held by the government in trust means liability, okay, are kept in public account. Provident fund, small saving, collections, receipt of the government set apart from expenditure on specific objects such as road, education, reserve fund, special fund are an example of this. Public account fund that do not belong to the government, they are the funds which do not belong to the government, okay, do not belong to the government and have to be finally paid back to the person or the authority who deposited them, do not require parliamentary approval. So if you are taking something out of it, it will not require parliamentary approval. Now try to understand what is a revenue budget, what is a capital budget. As I told you, budget basically means a estimate of the future spending. Suppose you are going to Agra, so you will take some amount of money with you for the tour. Suppose it is 10,000. No, that 10,000 you have taken because you have estimated that you will spend 10,000. You will not take 10 crore maybe. You are not going to spend that much. So budgeting is such a thing where you make an estimate. Now what is the revenue budget? A revenue budget is from where you are going to source all the money and in what you are going to spend all the money, which are very much essential, which are not going to increase the monetary value for your thing. Okay, so let us understand this in very easy way. Suppose revenue is an apple, is a fruit. Revenue is an apple. Let us understand this way. So it is an apple. And what is capital? Capital is a plant, you can say. Is a plant. It will grow and it will bear you fruits and fruits and fruits. Not one but many. So revenue is one time. The fruit can be eaten one time, but the plant can give you fruit many times. So that is the meaning of capital, and this is the meaning of revenue. Now, once you have understood that, let us come and understand in detail. Revenue budget is sum total of revenue receipt and revenue expenditure. Revenue receipt is from where I am going to get some money. They are revenue and non-tax revenue. Tax revenue comprises receipt of taxes, income tax, indirect tax, and other duties levied by the union. The estimate of the revenue receipt shown in annual financial statement take into account the effect of various taxation proposal made in the finance bill. How I am going to collect my revenue, that I will have to specify in the budget. So I will say I'm going to tax this person this much, that person that much, and therefore I will collect this much amount from taxation. That is my revenue receipt of tax revenue. What is non-tax receipt of the government mainly consists of interest dividend on investment made by the government, fees, other receipt for services rendered by the government. Apart from taxes, whatever benefit government will have. Now come to revenue expenditure. So as I told you the Apple example, so government does something like Apple. Suppose the subsidy given to a person. Is that a plant or is that a apple? The subsidy given to a person is like an apple. One time use will be there. It is not going to grow up into a plant. The subsidies, the salaries, the pension, all of that are example of fruit, you can say. The revenue expenditure is for the normal running of the government departments and for rendering of various services, making interest payment on debt, meeting subsidies, grant in aid, etc. Broadly, expenditure which does not result in creation of asset for the government of India is treated as revenue expenditure. Now come to capital budget. What is that? Capital, as I told you, is planned. Capital receipts plus capital expenditure. So there are different ways to raise some capital which I can use to generate more wealth. So capital receipt are market loans raised by the government, borrowings by the government through the sales of treasury bill, the loan received from foreign government and bodies, recoveries of loan from state, duties, government, and other parties, and miscellaneous capital receipt. Now, this receipt are generally used in capital expenditure. What is that? Suppose I have 1 lakh profit, and from 1 lakh profit, I am buying an auto. I am an auto rickshaw driver. So, for an auto rickshaw driver, if a auto is bought, that is a capital expenditure. Because from that auto, I am going to earn a lot of profit. But on the other hand, suppose I won 1 lakh rupee, and from that 1 lakh rupee, I'm going to visit Goa, Maldives, and I'm spending on birthday parties, clothing, all of that. That is a revenue expenditure. Capital expenditure are payments on acquisition of assets like land, building, machinery, equipment, and also investment in shares, etc. As I told you, whatever investment we do, that is bringing us some dividend profit and loans and advances granted by the central government to the state and UTs. Now, budget session. There are basically three sessions of the parliament in the parliament. They are, the first thing is budget, the second thing is monsoon session, and the third thing is winter session. The budget session generally starts early year. It is from 1st of February when the budget is tabled in the parliament. Before that, you will have the summation of, that is called the economic strategy, just a day before. In 1924, the railway budget was separated from general budget in 1924. Now it was combined together for the first time after so long in the year 2017-18. Arun Jaitley presented the first combined budget for the financial year 2017-18 after the independence. What is interim budget? Interim budget presented by the central government just before general election. Suppose an election is going to happen. So because of an election, the government might or might not change. So there should not be a discontinuity in the policies of the government, because it might happen the budgetary allocation for one government should be different, and they might totally change in other government scenario, and that is why a budget which is passed for just that much period for which the government is there in power, that is called interim budget. So initially in February the first, the budget which came, that was an interim budget. Now that it is sure that this government is going to be there, they have passed the next budget. Now come to a term called demand for grant. What is demand for grant? Demand for grant is a formal request for funds made by various ministries or departments of the government. Means demand for grant is a formal request for funds made by various ministries or departments of the government. It is part of the annual budgetary process and is presented to the Lok Sabha. Now, all the ministers out there, like Railway Minister, Education Minister, Agriculture Minister, Health Minister, they will, with the Finance Minister, they will say, we want so much of money for so many projects and so on for the next year. Finance Minister is going to combine them together and put that request to the Parliament. And the Parliament will give the permission to take out a certain corpus of rupee from the Consolidated Fund of India. That is called demand for grant. We have an article for that. Article 113. It says the estimate of the expenditure shall be submitted in the form of demand for grant to the Lok Sabha. It will have the power to assent, to refuse to assent, or to reduce the demand. No demand for grant shall be made except on the recommendation of the President. So, if you want the full access to everything, then you will have to enroll to our course. And as I told you, if you want to enroll to our course for GK, it is 4.2K, and for complete MBA preparation or test preparation, you will have to pay 8.2K. And you will have to connect with me at 7764869624.